Well, on one hand, reverse mortgages are a national business. On the other hand, it's always great to have people who have expertise in areas, states, or regions. I'm excited to have today, coming from the Rocky Mountains, Colorado, Nathan Johnson, reverse mortgage analyst with Mutual of Omaha. Nathan, thank you so much for joining us today.
You bet, Bill. Thanks for having me on the Reverse Mortgage podcast. Really appreciate the opportunity and look forward to our discussion.
So, how long have you been in reverse mortgages as a focus, and how did you get there?
Yeah, so starting in September, it'll be going into my 17th year,
Oof.
and I started actually. My cousin was working for a national lender, and they had a small branch here in Colorado Springs. So I actually got started in 2002. Back before all the fun technology we have now, and had to find clients with roadmap books. You remember those? Trying to find
Yeah,
people.
Thomas guys.
Yeah. So I started, way back when, there was a few, again, a few lenders involved, and really helped grew a local branch. And we were actually competing with Wells Fargo locally, which is pretty good considering the time and day. They had a pretty good hold on the market locally, and
Yeah.
then built that into what was eventually a national sort of a national rep, and covered about 6 different states for Cherry Creek Mortgage Company, and
Oh,
then
I did some time with
eventually,
them.
yep,
Oh,
and then
wow.
eventually, yeah, I think they're now Guild Mortgage or something like that. So they've
Hmm.
transitioned a bit, but I've been with several other lenders, and now I'm with Mutual of Omaha, and really enjoy the culture and the emphasis on serving clients here. So yeah, so that's been kind of my journey. I took a little bit of a break in about 2010, 2011, got back in 2017, and yeah, I've just been loving what I've been able to do, and really help serve clients in a huge variety of clients from over the years. So it's been really wonderful.
For those who don't know about me, I was a mortgage originator before I was in real estate until
Ah,
about 2008. And I think in the 19 years I was in the business, I started in 86. So how does that work out? 23 years, I guess. That I
okay.
probably had about 20 different companies because they kept merging and growing and merging and cutting.
Yeah.
I never had a resume typed up. And Cherry
Right.
Creek was one. There in Cherry Creek, Colorado, one of the companies I crossed paths with all the companies, just because it just seems it was like a game of checkers with these mortgage companies. And I think that's why it's
Yeah.
so important. This series for me is it's
Mm,
not the company, though you work for a fine company, Mutual of Omaha, one of the top
sure.
reverse mortgage originators in the country, but it's really the person. I think everybody listening to this needs to know that's the individual originator probably that's going to be critical to you getting
Mm,
success. And so let's talk a bit about that. I'm
yes.
sure that you have, as a company, marketing and all that, but there's people who are top producers like you, and then there's the average and the bottom within your company, and you
Hmm.
stand out. And so, what do you think are the reasons why customers choose you over other originators or referral sources, attorneys, financial planners, and wealth people? Why do you think they choose you over
Mm,
other ones, or what is it that you strive to be so they will choose you?
yeah. Yeah. And I use the word reverse mortgage advisor, and I mean that at the very core of who I am and how I serve clients. And that's been I would say, it's been a work in progress, trying to learn how to, because we're in an environment that's kind of a unique environment. The mortgage lending world, as you know, is kind of turned into, now I don't think it's at its best place. It's transactional, but it's turned into more of a transactional industry. It's why we have Rocket Mortgage. You can go online. You don't have to talk to a person. There's kind of this trajectory of mortgage that has kind of pushed our industry, or kind of dragged our industry along with it. And what we found is, our industry has kind of stagnated for years. We really haven't had a lot of growth. We've had maintaining growth, but that's mainly because we've had this, what I would call we've kind of aligned ourselves with sales tactics, and similar sort of, hey, here are some features, some benefits, sign a loan application today, so people will will go on to websites and do the same thing they would do with the reverse as they would do with a mortgage. So the biggest problem and the largest gap that I've noticed over the years is that people, number one, especially generation, with the baby boomers, even prior to that with the greatest generation, very wary of being sold to. Right, they are probably targeted for so many different types of sales. They actually own the most. The boomers own the most real estate in the United States as an age group, and so what I've found is that those tactics of sales just they didn't work for me internally, but they also don't really work in the long term. And I say that with obviously with respect for all those that are involved in being as a reverse mortgage salesperson. But I switched into the advisor role because I felt we are actually not just a mortgage; we are a blend. So this is a financial tool that has mortgage elements to it, and that has to do a lot with the home asset and how unique that asset is in comparison with other assets. And so the discussion really begs a different type of a process. And so, as an advisor, I have taken that role very seriously. So I have a unique process is involving a discovery meeting that also moves into a design meeting. And these are all education focused. They are not selling focused. They're really based on learning. I'm trying to learn as much about the client as they're also trying to learn about the program and what will it truly benefit them long term, and how do they use this financial tool, right? So that's a big piece of what I do when I'm talking with clients, and I'm looking for opportunities to not just help educate them, but also to help them understand their journey in this home asset, like how they've amassed this amount of wealth, right? Whether it's moving to different parts of the country and the home values going up, or just simply hanging on to it, right? Paying off their mortgage. There's just a different conversation that happens with clients, and so what I've found is being an advisor. I want advocates. I do not want just a bunch of customers. I want people that go, "This is the best thing I ever did, and I'm going to tell everyone about it." And that's what I'm aiming for. Is not just getting a client. So, what was interesting about this too is we had the refi boom about 4 years ago, 4 or 5 years ago, and of the folks that were refinancing with me that were not my clients earlier, I noticed that at least half of them had no idea what they had done. They didn't know about their line of credit. They didn't know how it grew. They didn't know how to access it. Some of them, they didn't know how to build the line of credit if that was part of the strategy. And so that alone just shocked me because I'm sitting there going, what on earth are we doing here? Folks, half of them didn't know what they did. And this is a large financial transaction. It's not something to be taken lightly or just sold to like, hey, we're not selling widgets here. We're actually selling a financial tool. So anyway, that's my spiel on what it is to be an advisor. And there's a lot more to it, but that's the real crux of it is helping people understand this is a big decision. And then they also want to have somebody with them after the closing, because a lot of folks get dropped and they'll never hear from from the person that sort of originated the loan. And I think we need to do better.
Well, this is exactly why I launched this podcast, because as a real estate agent, occasionally and focus on probate, I would get people come to me with problems generated from reverse mortgages where the
Hmm.
originator was nowhere to be seen. And while
Yep.
there are customers who can self-help and go online and get the product, what they can't do is service it afterwards, as you mentioned, because
Hmm.
there's nobody to service. It's an 800 number because the company doesn't want to interact with the customers. Google,
Right.
Facebook don't want to call you back. That's why they set things up that way. That's why these
Right.
large 800 number
It's
call in
very true.
reverse
Yep.
mortgage call centers are that way. They don't want to talk to customers, whereas you and I want to help people.
Hmm.
And then also, I think that integrating the product or service with everything else they do, as a realtor, I want to integrate with the reverse mortgage lender, the financial planner, the attorney. And Facebook
Yeah.
and Google and tech companies can write a product for a commodity. What they can't do is make it fit the individual situation. That requires
Exactly.
an advisor. And so I try to do that as a real estate
Yes.
broker. And that's exactly what you're doing. And so
Wonderful.
hence I created this podcast to find like-minded originators, promote their business, and
Hmm.
help me and my customers find their way to somebody. So let's talk a little bit about some of the things you do as opposed to 800 number, I can deliver you a reverse mortgage. I assume you can do that. Let's talk
Yes.
a bit about, first off, post reverse mortgage and why it's so critical. Again, I launched this because so many people called me
Yep.
to say, hey, mom and dad died, they had a reverse, we didn't know anything about it, and we're now 7 months in, we're facing foreclosure. Can you help us? Oh,
Hmm.
wow, we hold
Hmm.
title in their name, we have to go through probate, that takes a year. How do we avoid foreclosure? Talk a little bit about how you
Right.
help customers avoid calling me with that phone call, or if you get the phone
Yeah.
call, you should call me with them. How do you help them with
Right.
that?
Well, first of all, I want to identify right off the bat who is helping them make this decision. Sometimes they'll lean into their kids. Other times their kids are well set. They're like, "Hey, mom, dad, just do what you want to do." Sometimes there's nobody involved, right? They don't have a trusted advisor. So sometimes I do take that role on. Sometimes we're working with a financial advisor, or sometimes it's a realtor. So just yesterday, I worked with a client who's just in the discovery phase. She had met with somebody else who was doing reverses part time, and she came in very confused. Like, I don't even know what's going on. This didn't make any sense.
Right.
And so we had to take time just kind of walking through the history of the program, because I really feel unless we talk about the DNA and how this program was built and why it was built,
Mm.
we just end up with all kinds of weird conclusions as far as, boy, this is a bad idea. Why did mom and dad do this, right? Or why? What are some of the hidden, the hidden gotchas with the loan? And to be quite honest, it's one of the best things the government's ever really helped design and bring into, the HECM is a law. So home equity conversion mortgage, the name of the reverse mortgage that we use, it's about over 90% of the reverse mortgages in the United States are these. And so I think education is really important. And I always like to just kind of back up from what I always like to find out, what have you heard? So that's the first question is, what have you heard? What are your burning questions? I'm sure you have them. Sometimes folks come in and go, I don't even know what I should be asking. And I'm like, that's okay. Right. And I think the other aspect of this is having a deep respect for the home wealth journey that this client has gone through. And the reason I do that is, I like to ask questions of, how did you get here? What was your first home like, right? You obviously have, sometimes they've been in that house for a while. And the reason I do that is I did a little experiment years ago when I was training some other folks in being reverse mortgage advisors, and we went around the room, and I just did this kind of off the cuff, and then all of a sudden I found out, like, oh man, what did I open up here? And it was this idea of, what was your first memory as a young child, like little kid, of home, right? And the stories were all over the map. Some were military, had moved several times. Others had been in the house for their whole life. Others had sold and they had to move. So it was that kind of question. And then the next question was, what was it like to leave that first home? And then what was it like to buy your first home, right? And so, Bill, I'm sure you've experienced that with buyers over the years, right? Their first ever home, and then, or maybe now selling their home, and they're going into assisted living, or they're going, or there's some other family dynamic of care or whatever that's happening. So that story and that journey was really important, and it was very personal for me as well. When I was a kid, my dad built our first home in Minnesota by himself. He had some people help, some contractors, but he built this home, right? So very proud of this. I go back to go check it out, and it's a little older, right? The paint's changed, a few things, and I'm standing outside, kind of awkwardly looking at the home, and the owner's out there, kind of trimming trees and raking stuff up in the yard. And I thought it was kind of awkward. I should probably say something. Well, so I said, I introduced myself. Hey, my dad built this house years ago. I just wanted to check in and see how it's doing. And he's like, yeah, you want it back? I went, what? And all of a sudden he started to just lay into all the negative things about the home. Boy, these windows, so the siding, some of this, there's just some, he just started going, and this is like it's a 40-year-old home, right? Of course it has some stuff, And I found myself getting kind of emotional, like I wanted to confront this guy and like and I what I realized in that moment is I'm like, I gotta, well, first of all, I gotta back off. And so I just said thank you and I just left instead of getting into a whole thing. But I realized that the home is something more than just this building, right?
Mm,
There was all these cherished memories of growing up in this space. And that is what, in a journey, we are really talking about. That carries through when we start talking about the home asset. If we don't have a sort of a category for that, or at least a respect that there is something different about this asset, then we're always going to be sort of running into, well, what's the program like? What's this? What we're really trying to do is say, listen, your home can now help you. It's an ally,
right.
and here's how this can work. And that conversation is a very different conversation than, okay, what's your rates and fees? Let's go, right? Let's get
Right.
let's get you to sign that loan app.
Right.
We're having a different conversation. And so that's what I would say my discovery process entails much more. I've got tons of questions. I literally have a two-sided sheet that I fill out when I'm working with clients. And it's really to find out what can we really do to help benefit them. And we talk about the 4 L's of retirement, which is, developed out by Wade Pfau. And really the first one we're talking about is longevity, right? How can we make your money last? And that's, for a lot of clients, that's a conversation we want to have. But again, this isn't just talking about, I mean, obviously the product is great. There's some really great things about it. There's some limitations also, right? So we have to work within those limitations, because we can't give them all the equity. That would be irresponsible. But we're going to give a percentage to help and to integrate into their other assets to make their money last and make their retirement better. So there you go. I guess that's a little difference in my process.
So when we work with our customers on a more holistic basis, it both
Mhm.
requires us to work with our other advisors, but I think it also makes working with the other advisors more valuable, deeper, more intimate. Um,
Yes.
uh, I think more successful as a real estate agent when I know about the client's estate plan and their transition plans, retirement plans.
Mhm.
Then, in case I work on an estate where it has multiple properties, and I know the game plan, something pops up out of the game plan, I can call the attorney or the financial planner and say, hey,
Yes.
this has popped up. Do we want to execute? Do you want to sell this property? Or this deal fell out of escrow? Maybe based on that change, we don't want to sell it anymore. And so I think that's
Mhm.
where
Mhm.
being involved in that process. Talk a little bit. How do you share this process with your referral sources? Are they coming to you through your consumers, or are you working with referral sources that bring you the consumers and you work with them that way?
Yeah, I would say there's a significant amount of clients that come to me through existing clients. Um, the majority of my leads would actually would come from financial advisors, some attorneys, some CPAs, some real estate advisors as well. And that is probably the most important piece, is just helping them understand my process, and that when you send somebody to me, I want to make sure this is lining up with some of the conversations you've already had, especially with a financial advisor or an estate planning attorney. If there's been a plan already devised, I want to know what that is, so we can say, okay, here's how we're going to blend this in. And and that conversation's going to be, when I have clients for the first time, we do talk about wills, trusts, we talk about financial plans. How much do you have in assets? We're going through all of that because it all matters, right?
Right.
Especially if they're looking at their estate and they've got some complexity to it and they don't know who's going to inherit this asset and all their other assets. Then yeah, we got to talk about trust. We got to talk about how is this going to be actually carried out once you've passed away. This needs to have a landing place that's not going to drive everyone in your family around you crazy, right?
Right.
You want to make sure you have. Now sometimes a will is 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 okay, right? It can work. But a lot of times when there's other pieces going on, I want to make sure I know what those are. And especially the planner is going to be interested in this too, because the planner, a lot of planners, when they're planning with a client, they also want to work with their kids because they may be inheriting a large amount of that asset, and financial advisors uh, are really wanting to continue their relationship. They don't want it to just end when mom and dad, or mom or dad passes, and so all of that's important. So we are. I want to name those people out front, but I really want my clients to know, listen, you've got to have a plan at the end of this, so everyone is kind of is aware. We actually have a really great booklet that we hand afterwards. It's a um, what happens after the reverse mortgage. It's a National Reverse Mortgage Lenders Association piece, but
I like
I
that
put
piece a
that on
lot.
top. Yeah, I put that on top of the loan package when they have gone to closing, and we talk about all these pieces, right? Who do you want to be as your main contact person? Let them know what's happening, and then I'm here for family members. I get calls all the time from family members that are, okay, mom and dad have passed, now what? And so we just reassure them it's okay. We'll take it a step at a time. Contact your lender. Just start the conversation. Everything's going to be fine. You're going to be okay.
One of the uh, balancing acts is I know there's sales companies that we recommend highly that when you interview a new client, you debrief on every vendor they work with and then attack each one of those vendors as a new sales source. And while on one hand, I can see the value of having that customer's Rolodex, on the other hand, I don't like giving that over to somebody who's new. That's a little intimate. I'm not sure how deeply I want to work with somebody from day one. And I'm
Yep.
not sure I want them to be the quarterback on the team. I might want them to be the backup quarterback, to use a football
Right.
analogy, or have them be on the team. So where do you draw the line? How do you decide who to reach out to on that team, or
Mm.
identify versus other ones that you may not take the time to because the customer doesn't seem willing or doesn't offer that up.
Yep. Yep. So I would just identifying that first. If the lead comes from a financial advisor, obviously that's going to be an important relationship that I will continue to encourage them to go back to the advisor. I'll even get their permission. Can I share some of this information with your advisor, or with your referral partner, or referral source, or your trusted advisor? Sometimes it's not even a financial advisor. It might be a trusted friend. It could be it could be anyone. So those conversations are important. I think also it's really trying to keep the goals. What are the goals that are the clients coming to you with? Now, sometimes it's a very easy solve. We're really doing more triage, right? We're trying to eliminate a very, I would say, a mortgage payment that's draining a fixed income bucket, right? And so sometimes that's just as simple as that. However, there's another conversation afterwards, is to say, what are we going to do with the savings each month? We have to direct those funds. We don't want them just pass through and keep spending, because sometimes that may have gotten us into trouble in the past, right? So we want to redirect those funds. So all of these conversations, I feel is best even after we've done a closing, is to say, okay, now what are we doing? So I'll do a 3-month follow up. I offer an annual review for clients, which is quite unique. I don't think anyone else that I know of really does that. Maybe there's a few that offer it, but the plan is really important. So sometimes we also run into some really difficult situations, right? We may have a family member, and I've run into this sometimes, where most of the family's on board, and then there's one who's not, and because he or she is going to, they look at the home as theirs, not mom and dad's, and so that's it. Sometimes those are difficult conversations,
Mhm.
but we have to engage them in, okay, who is going to care for mom and dad? How are we going to fund their care if they need it at home?
Right,
Uh, Bills become higher, right? I mean, retirement is not cheaper; it's actually more expensive.
right.
Whether it's medical bills, or just hearing aids, or the new refrigerator, all these things, right?
Well,
There's so
traveling,
many
because now
things.
they have time off, so they can
Travel,
travel.
yeah, right,
I don't know why I'm
yeah, yeah,
spending so much more money. I just keep going to my grandkids every month in New
yeah,
York. Well, maybe that has something to do with it.
yeah.
So you went over something. I'm sorry to circle back, but to me, this is really why I launched this podcast. I think the biggest missed
Mm.
opportunity for reverse mortgage originators to build more business. It's also, I think, so important value for consumers to stay out of trouble. You mentioned you do an annual review, and I believe, I'm not an
Hmm.
expert in the subject, but I believe most of the reverse mortgages in America require an annual statement by the borrower to verify that it's still primary residence and a couple other key points. And that if that doesn't get done, that's a problem. But more importantly, they start swimming too far away from the shore on their own without staying in touch with the
Mm.
originator. Yes, they can fill the form on their own, they don't need to. But to me, why would an originator not want to do an annual review? Why? I can understand a customer may not see the value and we're all busy and
Yep.
okay, but why doesn't every reverse mortgage originator attempt to get every customer on an annual review, to review that form, to make sure they know who's next in line, to
Yeah,
head
that's a
off
great
potential
question.
problems? I don't understand
Yep.
that. And to
Yep.
me, it just seems so valuable. Talk a little bit about the value of those that you do get on an annual review, what that does to your relationship and to
Mm.
your business.
Yeah. So what I found with clients when I am in the middle of this of an annual review, sometimes it just they call out of the blue and they're saying, "Hey, I really want to relook at this." I had one lady who was in tears, just calling me. She's worried her HOA dues went up. She has the reverse mortgage line of credit, but the previous loan officer actually didn't spend a lot of time with helping her understand the reverse growing line of credit that she has. And what's interesting in that conversation is she went from tears to the end of that conversation, just an absolutely peaceful and what was great about it is we discovered, well, your line of credit is growing well over $300 a month. Your dues went up 50. So there's where you find your your extra funds, right? So those conversations, and there's others that I have with clients. Like for instance, I had a client that sold a business, and he's thinking, okay, what do I do with these funds? And so we looked at a couple different options, and what he came to was this idea of, well, I want to grow this line of credit because it's growing tax free right now over 7%. So he actually made a large contribution, basically paid down his loan balance and doubled his line of credit in 1 month. And now that is growing at a substantial rate. So when the reason I think a lot of, I would say, reverse mortgage specialists or even just salesmen, they don't see themselves as an advisor. They see themselves as a mortgage originator. And that's the odd thing about our industry is we're handing people the keys to a very nice car. Okay. We're saying, good luck, have fun. And
Yeah.
we're not following up with what I think is really a fiduciary responsibility that we have to say, how is my client in doing better with this, and what are the benefits, and then how do I educate them? And sometimes we have to have difficult conversations on spending, right? Maybe we don't need to be spending money on this, right? Well, let's conserve this asset because we're going to need it in retirement. You're living longer, your health is great. We have to learn how to conserve this asset and not just spend it. And then there's ways we can learn how to grow it. I actually work with a budget coach, and I send a lot of my clients to him. Sometimes it may be after the closing, sometimes it's before we even have another meeting. I'm saying, you got to talk to my budget guy and get your budget squared away and find some money, but make some goals as to what is most important in your life right now. And those things will direct the budget. So the after effect of having a conversation, going back to your original question, is I think is not only important, it's a fiduciary role that I feel like we have to take on as reverse
Mhm.
mortgage advisors. But
Mhm.
I'll tell you, there's so many opportunities though to be introduced to their friends, their
Yeah.
advisors, other folks that are in their world, not from a place of, well, I just want to grab a bunch of contacts and start emailing them. No, it's, why is this person important in your life? Can you introduce me? And I've had that happen several times where I've got some great introductions to sometimes their neighbors or friends or
Right.
family or an advisor. So there's opportunities to have a greater influence in your client's life, but also in their sphere of influence.
Well, I think when you create value for other people, they're going to refer you good people. The people that refer you are only good because you've done well by them. I know I met you through a colleague, Matt Allen, and
Oh yeah,
again, I think that's
Matt's
proof
great.
of what. Yeah, I think that's proof of what you're talking about. And you also again hit something that is one of my mantras. I have another podcast called the Real Estate Market Update, where I kind of take to task the news because it constantly makes people feel like victims. Hey, I can't help spending too
Mm,
much because the cost of living is going up. Well, yeah, but
yep.
nobody says you have to do this or that or this. What are cheap
Right.
alternatives? And if you take control and start from, I'm in charge and I make these decisions, not the world. And
That's
yes,
right.
the world's changing, but I can choose.
That's
Do I
right.
really
That's
need
right.
these services monthly? Do I need to live my life with this additional cost and expense and such? Or is there an alternative way to
Mm,
do it that's more fun? And I think
yeah.
as you get older, you have to really reevaluate your choices. When I was a kid, I loved having new cars. As an older person, I don't drive as much. And my wife and I have two older
Hmm.
cars that are paid for. And yet,
Hmm.
I looked at a new car, and I live in California where it's so expensive. That's much
Oh
cheaper
yeah.
to do an Uber when we want to go out someplace nice. And I get a nice Uber, and I don't
Yeah.
spend as much on a
Great.
month as I might on taxes and insurance on a car, let alone the cost of the car. So,
Yep.
um,
Yep.
it's one thing. So let's talk a little bit about how do you help people? While I hear you talk about the tactics, I'm sure it also starts with their motivation. At some point, you have to tell people,
Hmm.
hey, you're not a victim here. You can change your budget to use the budget coach. You can change your investment
Yes.
strategy. Uh, Talk about a little bit about those conversations you have with your customers.
Yeah. So it all starts really with I like to find out um, where how this so in our conversations typically I'm going to be asking clients not just about their assets, but like tell me a little bit about not only your goals, but what are you really trying to accomplish, and are these aligning? And I think that's sometimes the interesting conversations. That are these aligning um, with what I call modern retirement theory? It's not I call it, but it's an actual website you can go to it. But they talk about how important it is to set this idea of first we're trying to solve for longevity, then we're looking at liquidity. Do I have a contingency fund? So the first is base fund, then contingency fund, then discretionary, and then legacy. And the idea is in that order, we want to rightly order things. So sometimes folks will come to me and they're just saying, well, I just want my kids to get everything. And I'm saying, your kids are still going to get, they're still going to get an asset here. There's still going to be something left for them. However, how are we going to navigate retirement and the 15 risks that all are inherent in retirement, right? Whether it's loss of spouse, loss of income, health loss, all these different risks that create opportunities for us to talk about it without panicking and without fear, but also we have to acknowledge it. We have to be aware this stuff is coming, right?
Yeah.
Retirement has its challenges. And so when we're going to have those budget conversations, sometimes I will actually just have a separate meeting with them. And because we run out of time, the discovery meeting, a lot of times it's okay, here's what we're going to do. We're going to set up another time to meet, and we're going to talk about, it might be a budget review, it might be an asset alignment conversation, because I have quite a few clients that actually are in the have multiple millions in net worth, and so that's a different conversation. And so it really depends on the client and where they're wanting to go, but I want to make sure that we're aligning it with the 4 L's, right? We really want to make sure we've got longevity handled, and a lot of times that's the sneaky one when it comes to long-term care, right? So many people have kind of just said, well, I'll just hope things are going to be okay. Well, without long-term care insurance, even with long-term care insurance, my mom has it, and it's going to cover her for $250 a day, but there might be additional care needed, right? My oldest client is 100 years old. Okay, uh, he was a World War II vet, just a decorated war hero, and he burned through his entire retirement with basically paying for care, $22,000 a month. Can you imagine?
Yeah,
But he
no,
wouldn't leave his home. He's like, I'm not leaving. No one's taking me out of here. But that'll eat up a retirement asset really quickly. So
yeah,
we're coming in and we're gonna give him, quite a few more years in his home. Um, but these are all the things that we really want to try to help a client understand. Here's where you're at. We gotta solve for longevity first, and then we want to talk about creating contingency funds, and then the discretionary, or like the fun stuff, right? This is what makes retirement enjoyable. What's the key vacation you've really been wanting to take, or maybe it's not even a vacation. Maybe it's just I want to be close to my grandkids, or I want to, you know. So yeah, those are some of the discussions I think that are important in that discovery meeting. I hope I answered your question. I don't know if I dovetailed a little too
yeah,
much.
yeah. It just thought we got a little bit long, but I'm kind of anxious to hear you on a question that's been on my mind a lot, which is
Yeah.
I feel like I should have been put out of business 5 years ago by younger people. And a combination of
Mm,
COVID holding the next generation back and technology enabling me. I'm 66. I'm doing as much business as I ever have. I'm doing it more easily
that's
and
great.
efficiently, I think at a higher level.
Yeah.
Yeah, and I see other people in our industry that are, I'm not interviewing on this series. I've been looking for young bucks, younger people coming in who are newer to this who bring new energy. And I don't see that not just in reverse mortgages and forward mortgages. I don't see it in attorneys. I don't see it in realtors.
Mm,
And while that's a negative, the positive is somebody like me, instead of retiring 4 years ago like I planned to, I'm still
yep.
making really good money and building a business. Talk a little bit
It's
about
great.
how you see your career and that
Mm,
opportunity, and where does that fit in for you or people like you?
yeah. So before the market kind of we've had a little difficult market last, 3 years. But I love those challenges though. And I was actually building a team at that point. And my goal is to go back to that at Mutual. There's some pathways that I can do that. And I really enjoy introducing this even to a younger crowd. In fact, I was invited to an attorney's office recently, and I was noting the age in the room, and they had a lot of, I would say, in the 20s. Like they'd hired a lot of folks to do their system is really based off of running seminars and that type of thing. And what's interesting is I started to notice that this group had there was a lot of interest in this. They were curious because they'd seen a lot of, being in that world. They'd seen a lot of family dynamics and what's going on with the house. So one of the things that I would love to see is I would love to see um, not only folks my age, but I would love, because trainable, teachable, right? I want folks that are going to approach this from an advisory perspective, and I love to be part of helping train
Mhm,
advisors in this space. I feel we
mhm,
desperately need it if we're going to help.
mhm,
Yeah, we're going to have some growth just because of when rates come back, and we'll see that. We'll see some growth in that. But I want to see more sustainable growth. I want to see this become part of the conversation. The HECM reverse mortgage is part of the conversation. We're in the accumulation phase, and we're working with a mortgage, but on the distribution phase, we're working with the HECM, and we're going to work within the confines of the program, but there's so much that can be done. And so I really feel like what we need to see in this market is an introduction of more advisors that
mhm.
are really helping people understand their home wealth and helping them plan it, sometimes even before a reverse.
Right.
I had a couple come into my office, 50 years old, and their advisor said, "You got to go talk to Nathan, because I want to blend this into your plan. When you turn 62, we want to turn on this line of credit. We want to get this thing rolling, right?"
Right.
And so it was a very interesting conversation because they're actually younger than me. so so I'm sitting here having this, reverse more. But I feel like I want it to kind of, I want our industry to be better, and I want us to be able to
Mhm,
treat our clients better. And the way we do
mhm.
that is by creating more advisors. And that's
Yeah.
probably one of my big passions. And that I'm going to be looking for ways and more ways. In fact, I'm planning on writing a book about this I've already got a guy that's going to help me write it. But the idea is, how do we create an advisor role when we're talking about the home asset, and really elevate the conversation, not just make it about what's your fees and rates, and let's get you going on an app. We really need to elevate it, because I think for longevity purposes, I think this can be a powerful tool in the years to come, especially with the huge transfer of wealth that's going to be happening in the next 10 to 15 years in our country. We really need to be well positioned and have true advisors in that space as a reverse mortgage advisor.
Well, I
So
think well
that's what.
said, Nathan. That's one of the reasons why I launched this podcast. As a realtor, I see we need more and better originators in this space. And I think anybody thinking of getting into this business or expanding in this field would be well served to pay attention to what you do and get in touch with you. I have up here, let's see, your website. If somebody wanted to get in touch with you, as well as your email and phone number down below, is that the best contact info?
Yeah, absolutely. It's great.
Fantastic. So you have a direct line for your website, which is todaysreverse.com, todaysreverse.com, and the phone number is 719
Yep.
243 4299. Nathan Johnson is a top reverse mortgage originator out of Colorado Springs, Colorado, serving Colorado, Arizona, Wyoming, and New Mexico. But more importantly, if you have questions
Hmm.
regarding reverse mortgage, he's professional. Nathan, thank you so much for your time today. I
Yes.
really appreciate you.
Great to be here, Bill. Great to be with you, and wish you the absolute best. Keep this thing going. This is great.
Thanks.
So
Thanks.
thanks for the opportunity.
Thanks so much. And this is the Reverse Mortgage Podcast. We get together every week with top originators like Nathan and vendors and management to talk about how to both serve our customers better and work with vendors in the space, related spaces, attorneys, financial planners, hopefully to learn also how to be better. If you have comments or want to participate more, go to the Reverse Mortgage Podcast group on Facebook. You can look for referrals there, or you can offer referrals in other states and such. Ask questions. We have a pretty active group. Look forward to seeing you there. If I can help in any way, I'm at Bill Gross Probate on social media. As always, make today your best day ever. Thanks so much.